Good morning, everybody. Welcome to another iteration of Value Investors Edge Live. This morning, we're hosting Scorpio Tankers President Robert Bugbee. We also have James Doyle, Head of Investor Relations, on the line as well. Hey, good morning, Robert. Good morning, James. Thanks for joining us today.
Hey, thank you. Thank you very much.
Yeah, absolutely, Robert. It's great to have you on the line. So we'll start off just talking about the market, some of the market dynamics, and then we'll sort of shift into Scorpio Tankers specifically. But just big picture view on the market. I mean, we had a monumental 2022. We had all-time record high product tanker rates. What's driving that? Why is it behaving differently this year?
Well, I'll start and then James can follow. Well, I think that the market cannot afford any lull during that period. So, previously there's good reasons why, the mid-end February pauses a little bit, good reasons why August, September a little bit quieter. So you normally create a lull in the situation, whether it's, refinery turnaround, the traders not feeling a requirement to buy, etc. And that's pretty tough to do now this year because in simple terms, we exited last year's winter in the Northern Hemisphere with inventories extremely low on a multi-year record, on a multi-year basis. And we're now about to enter winter again, and the inventories in many cases are even lower. So I don't think that people could stop putting the foot on the pedal during August and September. And in fact, as we've seen, they had to ship more. And are shipping more. James, you want to add to that?
I think you hit the major points. I think just one other would be, we're looking at 80 million barrels of refined product demand for Q3 between gasoline, diesel, naphtha, jet fuel, and fuel oil. And this is 3 million barrels a day higher than Q3 last year. So as Robert highlighted, inventories are at or near where they were last year, in some regions lower. We have 3 million barrels a day of extra demand. And there's been a lot of refinery dislocation over the last 3 years. So you have this really tight system where, if there's a refinery outage in Europe or the US Gulf or delays in the Panama Canal, all these small things are just creating a tighter and tighter market.
And I think that if I might just add to one other thing that's of interest is that, we saw the Saudis and the Russians put this OPEC cut in starting from, this next level came in at the beginning of July. And what happened? The product market just carried on going up, as opposed to, let's say, the crude oil market at the time. Because it really is not about, shortage of crude at the moment. It's shortage of refined products in the places in the world that consume them.
My biggest enemy in trading and investing is often myself, right? And so it always concerns me when I'm extremely bullish or extremely bearish on something. And it's always, it makes me paranoid.
I feel totally the same, but we've got a really healthy situation. We've got many people who don't understand it waiting and wondering whether they should jump in or not. Right? Because they've been, there, and we got new people coming. That's fantastic.
Well, the market seems to, on the product side at least, and even crude, honestly, the rates are not too terrible considering the OPEC plus cuts were extended. Product market seems to absorb it. What about this Russian diesel export ban? What sort of impact is that going to have?
Sure. So look, they've slowed down exports this week. I think the consensus is they can hold back exports a few weeks, but I think beyond that, financially, can they afford it? That's a question. But more importantly, do you run into storage constraints? So if you slow down exports, you have to slow down the refineries, you have to slow down crude oil production, and these things take time. I mean, just think back to 2020 when crude oil went negative and floating storage surged, right? So we've got this stronger demand. We've got the dislocated refineries, and what you're seeing is 1 to 1.5 million barrels a day more product on the water, just simply volume. And I think as we talk to investors, especially those that have more of a long-term focus, that's what matters, because the volume of exports increasing is not really a reflection of the Russia distances, which we can talk to, and ton miles have increased, but it's really just that refinery dislocation that's having a material impact in kind of how we got here.
Yeah, it certainly makes sense, James. I want to give you the last word. There's a lot of product tanker companies. There's even more tankers overall, right? There's a ton of them. Why should investors prioritize or consider Scorpio versus all those other companies?
Well, I'll give you the short-term position because I think that, there is short interest in there. That the actual shareholder register, because it's been trading so sideways, it's been, tightening and tightening going through this. That, we have a great fleet. One thing that happens when oil prices go up and we get into this is bunkers go up. So we're going to start getting benefit again on actual fuel consumptions, etc. That you can very clearly see that as we buy back these leases, it improves our position and our cash break-even points at any time. And we've already seen that when Wall Street comes in, this is the go-to company because of its volume. It's trading in a very quiet time, over $50 million a day, which is, the total amount of a bunch of our peer group put together. And that's going to bring those people in. I don't even think like that. I mean, look, we own other of our peer group. The real reality is, pick your poison, right? If you want to have a big dividend, then yes, please go and buy Hafnia, go and buy any of the others. They will do well too in a strong product environment.
Yeah, certainly. I mean, let's hope for that. And of course, a rising tide lifts all boats, but we're certainly rooting for you, Robert. We appreciate your time today. Thanks for allowing us to go a little bit over time. And James, thanks for joining us as well. We really appreciated your insights also.
Thank you.
Thank you very much, Jay.
Absolutely. Hope to talk with you gentlemen again soon.